This is episode 13 to the Asian Session Library. Once again, UJ with an example this week. This week has been phenomenal for the Asian Session model. Not to say it's going to be like this every week. You're not going to find winners back to back. There are going to be times when you use the model, you're going to find back to back losers. I want people to know that it's not 100% guaranteed that you're going to get this set up to play out every single day of the week. There are cases where you have back to back winners and it feels great, but just be prepared when you do the model and it fails on you. But it's just an informed model. That's all we're taking here. Just like any other episode, we're using the New York lunch session right here, which is from 12 p.m. to 8 p.m. And then we're using this session to help us trade this session. That's all we're using. We're using the previous dead zone to help us trade a live zone. This is a dead zone because most likely after 12 p.m., the market's going to go in consolidation. You can see it went into consolidation. We're not trading here. But we're going to utilize the swing highs and swing lows that formed just prior to 8 p.m. So we have a swing high here. So this is a swing high. What's above this swing high, guys? Buy side liquidity. If you got buy side liquidity, it can be used as an area to raid and then use a turtle soup sell setup. Same thing vice versa. What do we have down here? We have sell side liquidity. It can be used as a break on sell side liquidity, purge it, and then revert back as a turtle soup back to buy side. I'm going to mark off the rest of the swing lows. We have one there. And we have another swing high here. And then we have the highest high of the session, which is right here. I like to mark that off as well. So going into the session, we have some areas that we're focused on to give us a trading idea. And if we play it forward, we see at 8 o'clock, price opens and shoots up and takes out the 15-minute swing highs and the highest high of that session as well. As soon as that happens, I already know we're in a premium and we've rated buy side liquidity, so there was a purge. I'm looking for now a revert back down to sell side. We're also above the Asian session open. Let's not forget that. Very small crucial detail here. So 8 p.m. Asian open. We're above that price point. Now, when price is above it, I say this all the time, it's a premium. You started the auction here at fair value and price went up for that good or services that you're looking to sell. You most likely want to sell at a higher price so you could get a better, reward for your work or whatever it is. So you want to sell high. It doesn't matter who you are. From a retail perspective, from a large commercial, you want to sell high. Everybody's selling high and buying low. This is a sell high opportunity. So we're going to take that chance by going down to the 1 minute and looking for a fair value gap that forms with the shift breaking a swing low. So we can see we're above that 8 p.m. opening price. And as soon as it opens, it runs through what? Buy side that we marked off on the 15-minute time frame. We're above 8 p.m., so we're in a premium. It's overbought. All we have to do is wait for a fair value gap that breaks a swing low. So if we play it forward, got to be patient. And there it is. You have a swing low formation. We'll zoom in. 1, 2, 3. That's a swing low because the candle on the left of this candle here is higher and the candle on the right is higher. So that's a swing low 3-bar pattern. And it's ran through with speed. We have a fair value gap that runs right through it. That's your market shift with the fair value gap. You're going to wait for price to trade down into it. You're going to go short. We're normally aiming for a 1-to-1. Very simple. So let's say we're going for a 15 pip SL and a 15 pip TP. So come down. There you go. You got your 1-to-1 ratio. Risk $1 to gain $1. And then we'll wait for price to trade back into that and go short. So play it forward. Trade into it. Run away. PD array forms where? Above 8 p.m. again. The PD array is forming above 8 p.m. opening price. That can't be by coincidence, folks. Look back at all the episodes and notice the same thing is happening in all the examples that I'm showing you. 15 pips acquired. Done deal. You're done trading. And then, of course, you can have the cherry on top with a scaling stop loss. So you scale out, and then you have the stop loss following long price. So you scale out of your position. Let's say you go one standard lot, you scale out 0.80 off of it, you hold the other 0.20, and you ride it out. And that's what we were able to do last night. And many other folks as well shared in the channel that they were able to catch this setup. And I was very happy for them too. Because I want you guys to win. I don't want to be the only person noticing these moves. I want to expose it to the trading community. And that's what we're going to keep doing. Doesn't matter. Just keep getting the information out there that there are simple methods to trade. You don't have to make it very complex. You could teach anybody on the street right now. In your local community, if you have a little common sense, you teach them how to trade. I guarantee if you teach them this model first, before anything else, they will get this like the back of their hand. No problem. The steps are really concise. Let's walk through the steps again. What does price do on a 15-minute time frame? Price during the New York lunch session is most likely going to consolidate. That's what we got here in that time period. But we're using this time period to help us trade the next time period. So we're waiting for a break on the 15-minute swing highs or either the 15-minute swing lows, because it could go any way. I'm not trying to predict this with the daily bias. Many people ask me, am I including daily bias? Not really. I'm not really concerned about that. I'm just looking for an opportunity to get a reversal or some type of turtle soup, a little tongue-tied, turtle soup opportunity for me here. So price coming up and then going short. Price coming down, then going long. That's it. And we can see, you play it out. At times, it gives you more than 15 pips. At times, it gives you more than 30 pips, 40 pips, sometimes 50, maybe even over 100 at times. But small target, definitely acquired. That's what we're doing consistently every time this time period comes around. So right now, we're currently going to be loading up, you see, the next model on a Tuesday. Now, if you wanted to optimize this model, I tell people this personally, pick specific days that you think are more successful than others. For example, Monday, Tuesday, and Wednesday could be ideal days for you to trade. Try and see if you find more wins on those days. I personally think that Tuesdays and Thursdays tend to be more successful for the Asian session model. That's my personal take on my own data. However, if you've done your own back testing and you find that other days are more consistent with that model, stick with that. I'm not trying to force you into one way, but I'm telling you that this model brings simplicity and discipline and consistency to your trading journey. If you don't have a model, I think you should take this into consideration. Hopefully this was insightful. Peace.